Welcome back for lesson 2 of our revision, and lesson 2 is about our adjustments and financial statements. And please can I remind you that your 3 financial statements in total, including obviously analysis and interpretation, is always your biggest question, your longest question, and the knowledge of income statement and balance sheet and the notes is crucial before you can do a cash flow statement. You can't do analysis if you don't know your income statement and balance sheet. So if the lesson 1 was on the ledger, we now come to the big questions, and I'm just going to do a selection and go over a few items here so that you can feel that you remember what you did in the first term and then go do exam papers. Right, so let's get going. This one is about activities 4 and 5 from the revision pack that we started with. And if we start with activity number 4, you'll see that the first thing, like I explained before, is the introductory paragraph. We work for Tony Limited now. We have to know that our year end is 30 June 2020, not February like we used to. We have to know that this question is a bit different when we have to explain how adjustments are done and how it affects both statements in a table. And if they give me the timeline, if they give me the year end and I know I'm going to do adjustments, I draw a timeline now because I will need it later on. There's the table. You'll see here they give you the adjustment, then they want you to say in what part of the income statement or balance sheet will it be, and then show either a calculation or just the amount. I'm not going to do all of them. I've picked a few. I have also, like you can see here with number 1, I have highlighted or made bold the keywords, which is the stock that was returned. Now, the physical stock take means we are now going to have to see after the 6,000 Rand is returned what my trading stock deficit or surplus will be. Now, although I've already decided or said it's an operating expense, remember it's because I did the calculation already. It could have been trading stock surplus, which is an income. But if you look at this, the stock in the trial balance, this amount, minus the return, minus what we really have according to the stock on hand, gives me a 5,000 shortage, which is, of course, a deficit. Then we do know that inventory or trading stock can be no other place than under current assets, and that we have already decided or counted that the answer must be 427,000 Rand physical count, but in the note, if it's asked, you would have shown that that's the pre-adjustment balance minus return to the creditor minus the deficit. So that's just a bit of revision on that adjustment. When we look at the next adjustment, and I think I've also got a ledger of that for you, the provision for bad debts is to be adjusted to 6080. Always make sure you read what it says. They could have said adjusted by 6080. This is to. So you'll just have to end at 6080, and that is not the answer. We have got, in this case, an income again. It could have been other operating expense, but I have done my calculation already. The name of the account, however, is always what you see here, provision for bad debts. Remember, in the income statement, it is the one with the word adjustment on the end. And how did I get that? I took the 10,400 in the pre-adjustment trial balance minus this amount that it must end at. And how do I get 10,000 to drop to 6,000? I've got to decrease it with 4320, and that is a good thing. We are decreasing a negative provision, a negative asset, and therefore it's an income. And of course now, no other place than under current assets, trade and other receivables note, do we find, in brackets, provision for bad debts. And we have now changed it, like they told us, to 6080. So that is revision on that. Like I said, I just want you to quickly look at the ledger. I have used the abbreviation here just for myself. You can also, when you practice, do these things so that you can work more. You don't want to write so much that you in the end are too tired, but not in the exam, please. Then you write this out. So like I said, the balance sheet one is a negative asset. And if I can make a negative thing decrease by 4320, then this decrease is an income. As you can see, it's credited. The option would have been to also increase it, and then it would have been credit the provision for bad debts account and debit provision for bad debts adjustment. So you've got two options for this adjustment, and you must make sure you understand both. I've chosen number 4, and I've highlighted already that it is the tenant that paid 2 months rent in advance. Now, of course, with rent, you'll see in the trial balance that it's rent income. You don't have to be confused here, but also the fact that it says the tenant. If we have a tenant, then obviously we own the building and it's rent in advance. Then you go to your trial balance and you find the amount, which was 78,400. Why did I divide by 14? Because 2 months in advance means 12 plus 2, I've received 14 months. And I want to know what 2 of them would be. So this 11,200 must be taken off the balance. The prudence concept obviously applies. No, sorry, my mistake. The matching concept applies here. I have to use only 12 months of income, not 14. I've earned only 12. And then this amount here would be in the balance sheet. And if you think about who owes who, we owe them, which is called income received in advance, which is a liability. Tax. Can I remind you that in lesson 1, I showed you there where in the appropriation account, that profit before tax would be 100% and income tax would be, let's say, 30%, and after tax is 70%. So they do not have to give us the income tax amount. They can give us either the profit before tax or after tax. And I want to quickly show you on my paper again how to always use the concept of times by what you want over what you have. Let's say in any question they give me 410,000 rand. Okay, it will not work out perfectly because I just made up this amount. And then they say this is the income tax. Then they just have to tell me the percentage and I can work out the rest. So if they say this is 30%, I can then get the amount for my income statement above, which is net profit before tax. And I can also get the amount after tax or net profit for the year by taking whatever amount I'm given times, let's say I want this one, net profit after tax. I want 70%, so you want 70, but they gave you 30%. Okay, let me just quickly calculate that. 410,000 rand times 70 divided by 30. Like I said, I probably chose an amount that rounds off not nicely. So 956,667. So in other words, if I want the 70, then this is 956,667. And remember, and this applies at the bottom of an income statement or in cash flow at the bottom, when I reverse, something that has been subtracted will now be added. So I'm adding back the 410,000 rand. So before tax would have been 136,667. 667. I apologize, but for the amounts not rounding off nicely, but that explains that concept. Okay, back to our slide and our adjustment. If income tax is in my income statement, which it is, and the trial balance on my info, my pre-adjustment gives me 47,000. You must please remember, and you can refer back to your previous video, or my previous video number 1, that on the debit side I would have the amount paid. And if it says owed to, then what I paid isn't enough. So I owe another amount, and there's your answer. 51,600 is the expense. And of course, where would we put owed to? It would go as a payable, which is I owe SARS another 4,600 rand. Okay, activity 5 follows on activity 4. So I'm just going to find it here while you look at that. Okay, activity 5 must be on another page, so don't worry about that. Let's just do this quickly. It says here, it's a continuation of activity 4, so it should be completed in detail. And I've just done a few things. You must do all the adjustments. And then they want the statement of comprehensive income. Like I said, you must know both names. And they indicate that you must start with gross profit. And then fixed assets, of course, extremely important. Receivable notes. So this is a typical question, 40 marks, where they take a little bit out of the balance sheet, few notes, as well as the income statement. And of course, we do know that we must show everything in brackets. So if you have finished your formats on your answer sheet, or first copy the format, it would look like this. Of course, I can't show both or the whole income statement on one page. You'll notice in this case they said, don't use sales cost of sales. We're just going to start with the gross profit. Again, I'm not doing the whole thing. I'm showing you in which order I would be answering this. We have done deficit. So I'm just showing you that the deficit will be shown as a new expense that wasn't there yet. We have just done the rent income, which means this is what I'll show. We've just done the provision for bad debts adjustment. And remember, this account could have been under expenses, but because we decreased, it was a good thing. Let's do a new adjustment. So adjustment number 3 I'm showing you here. Very, very easy. It's very basic. Please get to the national papers where you will see which ones you find more of a challenge. But this is the basic for revision. If we've paid for 13 months, divide by 13, that amount is prepaid. Prepaid expenses, we'll see that later in our balance sheet, is a receivable. And then, of course, this advertisement amount is too much, and therefore I have minus 900 here at the bottom. Keep in back of your mind that we also are going to do the prepaid expense. In an exam, you would now do this, not later, but I have it on different slides. Look at the second half or bottom half of your income statement. This is also the half, or not the half, the bottom 7 lines that you must know. They don't have to give you this format. So please learn this format. Okay, you remember we said that the amount paid for tax plus the amount due equals the total income tax. We have, however, not done this adjustment. If you are one of the students who, when you see interest, you think, oh, no, I don't want to do it, well, you know how it is. The things that bother you, you must do them first so that you can get a grip on it and like it the next time you do it. Look how easy this is. They say, provide for interest on the loan. Of course, a mortgage loan is to buy property. 15% for the month of June, which is the last month of the financial year. Very important, the word capitalized, because if we then calculate the loan 15% 1 month, although we know it's always interest, the mortgage loan, and we'll show you that later, will be increased. There's the extra interest for 1 month, And also, I'll remind you that we've done this when we get to the balance sheet, mortgage, loan, non-current liability. Right, the fixed asset note. The easiest part would be usually land and buildings. But there was an error. So when you get to adjustment number 10, which you should have done when you did activity number 4, if repairs were incorrectly debited to land and buildings, it must now be taken away. So the wrong amount minus the correction equals the correct land and buildings. And if you just quickly look at this, I've just put it in fast. The cost price is always the equal to the carrying value, and again at the bottom, because there's no accumulated depreciation, and in this exercise there was no additions or disposal, but there could have been. Let's have a look at what happened to equipment. They have given us the 184,000 Rand already, so that's why it's there. I've only, they've given you the format as well, but I've just shown you here in the total column. If you would practice this many times at home, you can teach yourself the abbreviation and still say out loud the full word or sentence. So that would be the format. And you would put your brackets in right at the start, okay? Let's see what happened. New equipment was purchased on 1 January and properly recorded. So please remember, you'll start at the bottom with the answer, then reverse the additions. Sorry, let me try again. They give us 256,000. That would be at the bottom. If we bought 26, you'll start with 230. Okay, we'll do that soon. Then we're also going to show depreciation. Now, because of the addition, the 230 plus the addition, you have to separate. Your old equipment will be diminished balance method 10%. There's your answer. But the depreciation on the new one depends on when we bought it. And look up there. It says we bought it the 1st of January. And that's my year end. So for 6 months, depreciation is calculated. And there's your total. Let's see how that reflects on the note. You start, like I said, at the bottom, because that's in the trial balance and it was properly recorded that 26,000 was bought or additions, which means reverse back to 230 by minusing. I've just color coded it so that you can see the green, cost price, cost price, cost price. What did we do next? We will quickly get the carrying value, which is easy, just minus and put it on top of the block. Then we have the depreciation. And if you show your calculations neatly in an exam like this, then of course we will work with your answer at wherever you put that. So that would be a work with mark anyway. There was no disposals this time. Therefore, the 20100 is just the movement block. So these 3 items would give you a total there. And now last year's carrying value, 46,000, plus movements 2100 gives you the carrying value at the end. And it's easy to see that I just have to subtract these 2 from one another to get the accumulated. But also, look at the yellow blocks and the stars next to it. The old accumulated plus the depreciation gives you the new accumulated. So that's double checking all my figures. Please remember, you can only do this last bit that I did if there's no disposals. Oh, I just showed you there that the 46 and the 20100 equals the 66100, the 3 blocks for asset disposal. Okay, can I just maybe at this point say, if I am running slightly out of breath and I'll just get some water, it might be that you at this point, if you've done the one video after the other, need a break. So don't sit too long and just sit and nothing's really happening. If you need a break, take a quick break. You can now get fresh air any time of the day, which is great. Take the dog for a walk, come back, lots of water, and then continue. Just don't stop working. If in doubt, sit down and work. Right, let's see if I can now continue. You'll see here, we've got the receivable note. Again, I'll show you, or I have shown you, that we've already done this. We've already done this adjustment. And there's a new one I want to quickly, or it's not a new one, we did it before. Remember I said we'll get back to prepaid expenses. Now that 900 for advertising, therefore, will go here by prepaid expenses. Any other adjustments will go there by trade debtors. If you see there's a few lines missing or not enough lines, then you can assume, like in this case, SARS income tax won't be here and there will be no accrued income. What is this? This is 5.4, which is the A section of the balance sheet. It's just the equity and non-current liability section. Now I can remember that we had interest there, so let's see. Oh, didn't do that now. Let's first do the shares. If it says new shares were issued on 1 July and correctly entered, then it means 1,870,000 is correct and we won't have to change it. Always look for those words, either correctly entered or not yet entered. Therefore, it can just go in, it won't change. We've done this already. I've just put it here again. There is what there should be an R there, not a T, sorry. Mortgage loan must now increase. And we call this what? We call this capitalize. The word capitalize means add to the loan. There's the interest. There is, however, and it's called adjustment 6.2, which follows on the interest, that there will be capital repayments on the loan of $4,200 a month. And this excludes interest. So in other words, $5,400 will be paid off. And we do know that when we subtract it over here, it goes to the short-term loan. So remember, anything paid off in the next year will be taken out of the loan and taken to short-term loan. Let's finish retained income. A final dividend of 10 cents per share, if you calculate it yourself in your own time. Remember, if you're not caught up, stop the video and first catch up when you do this yourself. This 90,000 will be reflected as follows. And I wonder if after seeing video 1, the retained income note, you can now know what that is. If it's a plus, it must be the net profit after tax given. The 60,000 that I first subtract must be the interim dividend, so that the 90,000 is then the final dividend. Okay, you can see clearly here, in this exercise, there was no repurchase of shares because it would have been another minus. I've just ended this by saying, please practice, practice, practice. And a balance sheet like this, the part of the balance sheet we did now, and also the income statement, has a lot of work with marks. When you look at national memos and you see the little tick with a block around it, that's all work with marks, meaning don't sit with something you struggle and in the end you haven't finished your question. You have to practice against time at home to finish questions in the allotted time, so that you get all those work with marks for blocks and adding and etc. Right, I'll see you in lesson number 3.